Yeah, so first and foremost, you and I were just going broadcast crazy. I did CNBC. I was in the chair for 45 minutes. And you show up and they ask you, hey, what do you think they're going to do? And then they said how NVIDIA does, and then they get your reaction. And more times than not, I hit it. I mean, I don't think I'm not an equity analyst, but it's pretty clear on their trajectory when they beat raise for the past 5 quarters, what they were going to do. And then the big question was going to be good enough? Was going to be big enough for the market? And after hours, it ebbed and flowed. And, in the afternoon, yesterday, before afternoon, it was down. Then it peaked back. So, and that was really the time that people were chewing through a couple things. So one was the Q4 forecast, and the other one was Blackwell supply, right? And while NVIDIA handily beat that forecast expectations, they were concerned that they didn't beat it by a larger margin. And then you add that to the gross margin discussion and the Blackwell supply conversations, spelled a little bit of lowered exuberance. And we had a couple things. So on Blackwell supply, it's very clear when TSMC says that they're sold out for the next 18 months on leading edge, that it's a pretty good sense that supply is capped. And it's not just wafers, it's also packaging, which packaging used to be a second-class citizen. Now it's first-class citizen, and it uses packaging called CoWoS. So with that said, I do believe that NVIDIA is going to meet its forecast. And there were some questions on this overheating BS, and I always thought it was BS, particularly when Microsoft is announcing that it's going into production for its customers, and you have Dell, Michael Dell and Jeff Clark taking pictures of their racks being shipped off to tier 2 CSPs. This was an easy one for me, and that information article just didn't talk to people in the know like Pat and Dan. Typically what you have is every design has different parameters, and each designer has the ability to put in some flex, right, for cooling, for power. And it's apparent that some people didn't do that. It looks like Dell did, and whoever supplies Microsoft with its infrastructure did. I had a nice conversation with CFO Colette Kress after the call, and we had, we talked about a bunch of stuff. We talked about gross margins. She reiterated that Hopper and Blackwell were above the corporate margin. That didn't even necessarily make people feel good. She affirmed the content statement that I always make, that Blackwell has more content than Hopper, right? You got a full rack scale. You have networking, and then you have software adders where they built a multi-billion-dollar business. The question you probably get, and I get, Daniel, is how long does the growth continue? It's interesting. She said decades, and I liked the analogy she used for client-server computing, because that was the gift that paid for literally 20 years. But as analysts, we need to peel back. Is it possible? Yes, and particularly when you layer on, a robot in everybody's home and on the factory line. Yeah, I mean, it's possible. It's very possible. Will NVIDIA have the same dominance as it has in training, as it has in inference and every other thing? Probably not. But it can still make quite the business, even if others come in. They used the word inference multiple times, really leaning into that. And by the way, that was really a carryover from prior days with machine learning, when it went from hardcore training into inference. I forget how many times they said it on the conference call, but they used it a lot. So Daniel, I'm gonna turn it over to you.
Yeah, I think you hit a lot of the high notes, Pat. This was a case where the whisper number was the guide, not the guide. So the whisper number and the highest end of the whisper number was really what the market was looking for. So in order to sort of have that exuberance of charging higher immediately. But I think once everybody digested, they listened to the call, they looked at the numbers, they looked at the results, they looked at the stickiness of what was going on. You saw a bevy of upgrades come out the next day, which was indicative that the market still sees more upside. And remember, this company's worth $3.6 trillion at this point. So there's a little bit of an ebb and flow, a little bit of a give and take there. Like you can be really excited, enthused, believe the company's in a great place, but maybe not necessarily believe that it deserves to run to $4 or $4.5 trillion right away. There is an aspect of growing into this valuation. Having said that, based on their 50% growth rate expected next year, there is a realistic, on a forward earnings basis, that they're actually trading cheaper than they did a couple of years ago, which is crazy. Like you're like, whoa, but like, I mean, remember, this is a company that created more net income this quarter than a year ago. They created revenue, period. Like 17, $18 billion. They are sitting on an absolute war chest of cash right now. They're in a great position. You've got a macroeconomic situation with Trump entering the White House, where I would bet that regulatory scrutiny will be lesser for M&A. That administration is going to be all about a really, really strong stock market and high returns, which it requires the highly concentrated contributors to the S&P, like NVIDIA, to perform really well. From a technological standpoint, the question is, can these hyperscalers keep buying at this rate? I mean, you're talking about 10 or so companies and really 5 that make up like half the revenue of the company. So all we can do is listen to the tea leaves. You and I spent some time this week with Satya Nadella. We can't speak to what our conversation was specifically, but generally speaking, there was just no indication of real meaningful slowdown. What does seem to be well understood, having listened to Sundar, having listened to Andy Jassy, having listened to Satya, is that there is an expectation that CapEx might start to level off.
Yeah.
That's the big question mark for them. Where does NVIDIA's growth come from? Because you can't keep growing at 50% if they don't keep spending 50% more each year within this small subset. I mean, there was some bright spots outside of the data center. Automotive grew 70%. We've seen how big automotive has been for Qualcomm, which we'll talk about later. But it's actually a really big business opportunity for NVIDIA as well. I also think NVIDIA's robotics technology is another interesting place. So the TLDR maybe on this is that I think investors are also kind of curious, is there another bucket? Is there another moat that NVIDIA can take all this investment, all this capability, all this R&D, all this tech, and all this cash to create? Because we know that there's some limitations on training. You mentioned the inference upside, but inference is something that we would probably both agree that there is more opportunity for competition, whether that's accelerator chips by hyperscalers, whether that's Intel Gaudi, whether that's AMD and Instinct. There is the opportunity for more competition on inference, especially like use case specific workloads. And there may be better economics there. So the training is the moat. Inference is a big opportunity, and they're certainly becoming one of the biggest, if not the biggest, inference company. But if they could win humanoid robot or some large part of that, we know that Tesla and NVIDIA have a strong relationship with not Tesla, Musk with xAI. Actually both. But the net is will Musk lean heavier into NVIDIA technology as he rolls out what he believes is a multi-trillion-dollar opportunity for humanoid robots in the next years? This is where I kind of wonder, can it sustain the growth? Because it can't all just be data center forever. There will be some catch up there. There will be a point where all these companies have to be able to note returns on these AI factories. And that's what's not entirely evident yet, but I think there is an opportunity there.